What's up everyone, welcome back to Earn It, Save and Invest It. In this video, I'm going to be breaking down really quickly the HIMS and NOVO deal. I'm going to go over the biggest stories in the stock market last week, as well as what to look forward to next week. And I'm going to go over my $100,000 stock market challenge. So if you can, please give me a like and subscribe. I really appreciate it. And without further ado, let's get into it. So if you haven't heard, NOVO and HIMS, it's actually ironic this is my week 40 of my stock market challenge, and HIMS went up 40% after hours. I'm sure you've heard that HIMS and NOVO just made a deal that they're going to be selling the Wegovy on HIMS and Hers platform, right? So HIMS and Hers, as you can see, went up 40% after hours. It was at 1574 and now it's at 2209. Who knows exactly what it's going to be on Monday. The shares of HIMS surged 40%. There's no other way to describe the HIMS news as both a surprise and unabashed positive for HIMS stock. This analyst said, so this was a surprise. This was a shock. They were in a lawsuit with NOVO, right? The stock has been down 75% plus, and for months, and this was just a shocker, right? The reason why it's really going to be up, probably a lot bigger than that, is it has 81 million shares shorted. That's almost 40% of the whole company is shorted. It's insane. When you look at the stock market, I had a video recently, which I'm kind of upset. As you can see, I have like the graphic right here where it says 100,000. It was all messed up. I'm upset. I'm a video editor. I can't believe I put it out there. But anyway, in my last video, I did break down HIMS and all the big catalysts that happened. And so this is, when their partnership ended and it was at 45 bucks and it still went up to 59, right? But the CEO sells 33 million, but it's still at $51 even after the CEO sells 11 million. But then it just keeps going down 75% in the next 142 days, right? Eventually hit $17 after the NOVO lawsuit. And then it keeps going down into the 15, actually hit 14 something, right? Then it went up 40% in one day. But as you can still see, you're still down 65%. If you bought it at the top, not even the top, but if you bought like around, I think it was like 62 that I marked it at, right? Let's see. Yeah, it was 64, right? This is about 64. If you bought at $64, you're down 65% still. Even if you bought after the 40% surge and after hours, this is why it's so vital to make sure you're buying in a time where things are just not overvalued. You want to buy good companies, but you want to make sure that the stock is in a good position, that the stock is not overvalued. The company itself may be doing great business and making great profits, but if the stock is just too much, and of course if there's issues with it, HIMS is just, volatile as hell, but you go up 40% in a day and you could still be down 65%. Right, which is insane. So this stock has a lot of room to run. Last week's news, besides just what happened with HIMS, right? For the week ending March 6, 2026, the stock market experienced its worst performance of the year, with the Dow Jones Industrial dropping 3% and the S&P falling 2%. The three biggest stories affecting the market were the escalation of the U.S. and Iran war and oil prices going up. It's in the 90s now. We're already in the 90s. The oil is spiking. Geopolitical crisis, right? We already know about what's going on. If you don't know, now this Iran, Israel, U.S. conflict, everyone's just kind of, it's going down in the Middle East, right? And the Strait of Hormuz, sorry, I don't know how to say this, but it's the checkpoint where a lot of the oil has to go through, and they have closed it off. And that's creating, it says right here, the oil futures soared 35% for the week, the largest weekly gain on record, breaking above $90 per barrel. So that is having a big effect, right? We don't know exactly how long this is going to last. I did have a video about wars and how they affect the stock market, and I don't think that this is going to carry on for too long, but I do believe this can drag on over the next month or so if this conflict keeps going. It says investors shifted to a risk-off stance, fearing that higher energy costs would trigger a new wave of inflation and force the Federal Reserve to keep interest rates elevated, which is probably true. Also, disappointing February jobs report U.S. economy lost 92,000 jobs, a stark contrast to the forecast of 50,000 gain, right? So that's that's 50, it's 142,000 difference of jobs, right? Not great. This was the third monthly decline in 5 months, signaling a significant softening in the labor market. Economic outlook. The combination of weakening job market and rising energy-driven inflation sparked intense fears of stagflation. And this scenario where the Fed really has nothing to do about it. And then NVIDIA had their earnings, but nothing happened. Despite a record quarterly revenue of $68 billion, up 73% year. This is NVIDIA, 73% year over year. They fell the following, right? They fell. Like, what? The company announced it would stop excluding stock-based compensation from its adjusted earnings, a move that underwhelmed investors accustomed to more flattered profit figures. Sector rotation. The results triggered a rotation out of the high-flying semiconductor stocks into, beleaguered softwares, names like Salesforce and Microsoft. So at the very end, people actually started to buy into the software, the SaaS companies, because they had just been beaten down. So they kind of started to go into it a little bit, but as you can see, it was a pretty red week for the S&P 500. The technology services, the SaaS companies, got a little bit of love, by the end of the week, but they've been hit so much that doesn't even matter. Like I said with HIMS, right? You're down 75%, you go up 40% in a day, you're still down 65%. So these stocks still have a long ways to go. This is the Russell 2000. It's down 7% in 43 days, and it's gone nowhere in 142 days, right? The Dow, minus 5% in 23 days, 0% in 130 days. Hasn't gone anywhere. S&P 500, minus 3.5% in 37 days, and it's 0% in 154 days. Now, obviously, again, this conflict is really pushing the market down, but we have yet to really see what this market can do pushing down, right? Like, the oil, if it continues to go up, and Iran, if this conflict does drag on, I do believe that the market will drag along with it. As long as the conflict drags on, the market will drag on, at least for a month to 2 months, somewhere around there, right? After that, the stock market will kind of just get back to normal and go back up. But I do believe that. And then this is the NASDAQ, down 6.5% in 37 days, 0% in 171 days. So really, we've kind of been bouncing off this, this spot right here. As you can see, it bounce. This one's a little bit higher, but right. And now, so what are we going to do here, right? We're back here to this spot. We've already now had a few supports. Are we going to pass this? We'll see. There we go. If you don't know what the VIX is, it's the volatility index, and this was the carry trade back in August 2024. We had the tariff scare, which was Liberation Day in April 2025. These really shot the VIX up, and these were great buying opportunities. So when you see the VIX getting above 40, right, those are the two times it got above 40, you want to start buying. Now when you start hitting 30, it starts to really look like a good time to buy. Now, the problem is the market hasn't really done anything. These spikes, right, we still haven't done anything. We're still kind of stuck here. If you had bought here, well, that's where we're at now, right? You haven't made any money because we are on the way down. But if you are looking to buy, now might be a good time because we're now starting to approach the 30 in the VIX. If the VIX hits anywhere in the 30s, which right now it's at 29.48. If it gets into the 30s, a 32, a 34, a 35, anything like that, the mid 30s, it is I don't recommend because it's not my position to give anybody advice, but it's always a good idea to look into stocks that have been heavily beat, indexes that have even been heavily beat, and start buying into it. It doesn't mean put everything in all at once, right? Start doing a position here, like a 10% here, 5% here, another 15 here, something like that. Kind of build the position as things are still kind of going, because you never know, right? Things could keep going down. Things might just turn right back around. right? You don't want to really try to time it. So again, the VIX is starting to approach a really attractive point, right here. Sorry, I should have zoomed in maybe a little bit earlier, but right there, right? That's almost the 30. So we're getting there. This is the AAII Sentiment Survey, right? So bulls haven't really done much in the last 3 weeks, right? We went down 1%. I say weeks, I'm a bull, I guess, but hasn't really done much. The bears retreated a little bit, right? They went back 4% and kind of just jumped into neutral, right? Because people are wondering, okay, what's exactly going to happen with this conflict? I do believe, though, that this number is going to be higher next week. This week, this one will be lower, and this will be lower. I believe most of these numbers will then jump to the bearish side next week. And fear, we're going to stay in fear. We're going to stay in fear. I don't know if we'll go in extreme fear. It really depends on the conflict, how bad the conflict gets, how deep, how many casualties. You know, Trump said this should end in 4 to 5 weeks. Who knows if that's actually going to happen? But if it does happen, then we can be seeing the fear turn right back to greed really quick. But as you can see right now, previous close we're in fear. A week ago we're in fear. A month ago we're neutral, and a year ago we were in extreme fear. We're just about the same spot as we were last year. So it's kind of interesting. Next week's news, more just U.S.-Iran conflict, energy price, right? Are we going to have better oil prices? Is it going to hit overnight, or is it going to stay in the 90s? Is it going to hit the hundreds? It's going to be very interesting. We have the CPI report on Wednesday. February's consumer price index is the week's marquee data point. Economists expect headline inflation to rise 2.4% year over year, potentially showing that progress on lowering prices is stalling out due to rising gasoline prices. Core PCE on Friday. The Fed's preferred inflation gauge will provide the final word on whether the central bank can afford to ease policy in the face of recent job losses. And then the market sentiment. If inflation comes in cooler than expected, it would spark a relief rally. Conversely, if a hot inflation or a hot report alongside a weak labor market would deepen fears of stagflation. Along with the conflict, it could just get bad for a little bit. Oracle and Adobe, they do have earnings. Oracle is on Tuesday. It's a major test for AI infrastructure. Investors will focus on the Oracle's $523 billion in remaining performance obligations and whether its massive CapEx are translating into actual growth. Adobe is on Thursday. This report will serve as a bellwether for the software sector. The market is looking for evidence that Adobe's generative AI tools like Firefly can defend its market share against emerging AI competitors. Other notable reports, keep an eye on NEO for its first ever projected quarterly profit and AeroVironment for insights into defense spending trends. So they're, with the war or conflict and all that. So just really quick, the earnings, what you can kind of look for. So let's kind of go over this really quick. Like we have the Oracle, right? We said that. Let me see here. Loan Depot. Sorry, I didn't go through all this. I've been having a crazy weekend with the HIMS, and like I said, I work full time. I worked a 10-hour shift today. So yeah, Adobe. That's a big one for me. Adobe is a big one. That's at the end of the week, basically Thursday. So I think those are the ones I'm really looking at, right? Adobe, Oracle. I mean, I guess they're saying Neo, but that was Google that I was, getting all that information from. And so from a $100,000 challenge, I'm at $7,669.09. No bueno. And I'm going to go over exactly why I don't think it's so great, but if you're following at all, you'll know that I want to be better, but I'm going to show you something here, right? We have TQQ, Meta, Celsius, HIMS. HIMS, I just bought some too. I wanted to stack up more. I wanted to add more. I thought this lawsuit would drag on a little bit. I was like, you know what? I have a month. I don't like to just buy big chunks, right? And again, this challenge is to not do that, right? I'm not just going to be throwing in thousands of dollars or just dumping. I have put in a little bit more because I said when I see very big, really good opportunity, I will add a little bit more, and I was going to, but I did not think it would happen this fast. Up 40%, so my portfolio is going to go up after this week, but I did add some MU, some Salesforce. The trade desk went up 24% this week, right? But you know, I bought Micron, Salesforce, HIMS, and like I only bought one share because again, I'm like, I'm gonna buy one, and I'll buy another one. I bought $50 of Micron, $50 of Salesforce. I was going over Micron's numbers. I haven't fully gone over everything. I figured I'll put a little bit in. I do like the numbers. I do like what I see. So I did want to put a little bit of stake in the game just to have something right now. But I was, again, planning to add more to the HIMS and hers position, and I didn't miss the boat, trust me. Oh, I'm going to be buying more at 22 or in the 20s for sure. As you can see, weekly change is about negative 1.6%, even with the trade desk going up 25% because it doesn't account for that much of my portfolio. So I'm still down about 27%. I'm up only 4.28% since June 2nd. And if I didn't put in any of my deposits, the $50 or the extra $300 that I put in recently for Adobe and Salesforce, I'd actually be down 27%. Watch. HIMS though is going to be better. That's going to help me. Like I said, HIMS was at 50 or 52 when I started this challenge. So it had a big impact. It had a big impact on my portfolio and how it was going to go, right? Is that the last? Okay, that's the last one. So, yeah, you know, that's just everything. If you can, please give me a like and subscribe if you're still watching. I really appreciate it. HIMS and hers, again, Novo deal. It's going to be big. It's going to be, to me, it's big for the stock. It's way bigger for the stock. It's not as big for the business because the business is going to continue to run now. Yes, they will be able to sell a different product, a new product, but who knows what they're going to have to give up for that, right? Margins will definitely be lower with that. Are they going to have to give up any kind of compounding? I don't see them doing that because that's their whole thing, right, is personalization, and that's how you do it, by compounding. So it's going to be very interesting to see exactly what the deal is. It's coming out in just a couple days, so I will be making a video about that, but I make a video every week of my portfolio. So that's that. You know, just look forward to, I guess I don't want to look forward to the conflict in Iran, but we need to, you know, keep that in our mind about what's happening. And if it seems like the conflict is just escalating, you can expect most likely the stock market to keep getting worse. The prices of oil will go up, gold will probably go up, silver will go up, right? And the stock market will go down. Doesn't mean that you've lost any money. You've only lost money if you sold stocks. So go ahead, pick up some cheap shares. You know, if you went to the stock market, the grocery market, right, and you had all your favorite foods on sale, you'd buy it. So why is it any different for the businesses? All right, buy the businesses that are on sale. You know their quality, you love them, get them, and that's it. So thank you for watching. I really appreciate it, everyone, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.